this moment, only in my dreams. You're missing, but you're always a heartbeat from me. I'm lost now without you. I don't know where you are. I keep watching, I keep hoping, but time keeps us apart. Is there a way I can find you? Is there a sign I should know? Is there a road I could follow to bring you back home? Winter lies before me. Now you're so far away. In the darkness of my dreaming, the light of you will stay. If I could be close beside you, if I could be where you are, if I could reach out and touch you
Good afternoon. Good afternoon, everyone. Yeah, we were asked, is that Enya? Yeah, it is. It was Enya, and um, and we're also using Amazon Music, which is wonderful, right? Well worth it. Audiobooks and everything else too. Oops, I gotta get out of this dang thing. Um, and we'll just say good afternoon to everybody as we get set up. I want to make sure that I have the share sound off. I do, so I don't want any orders that might go in here sound like they're going in on your desktop. And yeah, she's great, or they're great, I guess, and relaxing. And hope you're having a good day wherever you be out there. I'm Bagged On. This is stockmarketcaddy.com, and it is Monday, and we're back at it. August 12th at noon. And how did I do that? I just deleted that. Let me see if I there it is. We got it back up. And we do these YouTube sessions not to prove anything, not trying to prove an outcome, not trying to suggest that everybody should do this. Probably everybody probably shouldn't do it. And you got to certainly have a passion to want to. And we do these to create some awareness of who we are, what we're about, which is mechanical trading, robotic trading, and trying to remove the emotions of fear and greed out of our own trading. And Stock Market Caddy is meant to be a mentoring site, a mentoring program whereby after a short period of time, you'll begin to learn and to trade your own game using we hope, many of our mechanical and robotic tools, but you may in time develop your own. And to that end, we're going to try to support you as best we can and be available. Of course, it's most intense for you and for us during what we call the Q School. It's a one-time thing. So if you're trying to calculate the cost of the investment, yeah, there's an initial cost. There really is. There's going to be a cost, if you're looking to become an annual member, there's that initial cost. But it is a one-time thing. And it's not just the cost, it's 3+ weeks. There's a lot of time. And we're going to work just as hard, if not harder than you, because we do. Your trading, your learning is going to take precedent over everything that we're doing at that time. And we're pretty much solely focused on trying to get you up and running. From there, you'll be underway and probably never, for better or for worse, probably never look at these markets the same way. You won't. And we're confident that you'll learn a lot. What I cannot speak to, I can't say, I wish I could, what you will do. I do know that you'll learn a lot. I do know that you will have fun. I do know that we will really challenge your thinking and you will challenge ours because it happens every time. And from that, we learn too. But what I don't know is, how you will perform. Now, you will, at the conclusion of the Q School, have a really good idea as to who we are, what many of the tools are. You get to see, we show you dozens of them. You have access to the library, so you can always pick and choose if there's something that we didn't show you. We encourage you to have TradeStation during the Q School so that we can send you some of these tools and you have a chance to work with them so that by the end of the 3+ weeks, you have the opportunity to do that and you answer the question that is, burning maybe in your mind now. Are these tools going to help me? Are they going to make me better? Is this going to be, a good thing? We certainly hope so. I think by the end of the 3 weeks, though, you'll know. You'll know. And I can count on less than one hand the number of folks that have gone through the Q School and not have not decided to go to the annual. Very, very few. I think in each case it was rather unique. I think they may have all sold themselves short, but you know what? They made that decision and it was fine. I think it was amicable. They learned a lot. They made an informed decision. And that's what we want. We've been told by others and people passing by that, we shouldn't just incorporate everything and um, I guess and do it maybe kind of quicker. We what we're trying to do is actually slow the process down. We think it's in your interest. We think it's in our interest, trying to give everybody the opportunity to ask those questions over a period of time, not just one day, but 3 weeks in a live environment, in a live, market. It could be Fed day, it could be earnings day, it could be an options expiration day. There'll be things going on for sure. And we're trying to actually give folks an opportunity to say, yeah, no, I don't want to do this. The few people that didn't go on, one gentleman, even though you don't have to do any programming, and we were very patient, he actually did very well. He did. But when it came time to decide whether or not he was going to go forward, because there are some inducements, right? There is an added cost, but you also get a discount, if you decide to go forward. But he just said, Don, I hate the computer. We're like, okay, we use the computer every day, so why do something you hate? He eventually came back a couple of weeks later and said, you know what? Let's stay. Let's, I wasn't trying to punish anybody, but I was like, you know what? You hated something. Maybe give it 5 or 6 months, and then I never heard. And another gentleman, he just disappeared. For lack of he disappeared on the third week. He was just gone. And I still don't know fully what happened. I got really concerned. I thought maybe he got sick or something. And then we finally connected at the end of the week, and I don't know. I think maybe he had gotten himself into a trading hole before Q School and thought that he was going to, in 3 weeks, get in there and just repair that damage and try to do that. I think. I don't really know, but that wouldn't be a good idea. Okay. If you have yourself a trading hole, you're in the hole, splash some water on your face, take a break, stop, look, listen, think about what you did, where you are, what you need to do differently, what you might need to do from an education standpoint, and then whatever you do, whether you come with us, or you come with someone else, or whatever you do, proceed slowly. You probably got into a hole very quickly, very rapidly. We're very much into proportional bets, slow, slow, slow. We want to build our wealth and our profits and run as a business, slowly. We're not trying to, we want positive outliers, but, we're not trying to, just trade, hit one golf shot and win the tournament type thing. Okay, so we're not doing YOLO or HODL. And then another person, very nice gentleman, and he just more or less said, "Geez, I don't think I realized how involved this was." And goes on, I learned a lot and everything. He goes, but I just don't have the time to do this. I'm like, okay, that's fair enough. And he took himself out. It does take a lot of time. And I'm happy to talk with you personally about how much time that might be. We do have members, a lot of members. It's not everybody's retired and not everyone's independently wealthy. They have all the time in the world. They're doing other things, a lot. And that's also part of the Q School, which we would like to be able to try to help you. Let us know how much time you do have. You don't have to tell me necessarily the capital because it's all scalable. And we'll try to help you choose some programs that you can get done what you need to get done in the time frame in which you have allotted to you or you have available to you, and how you might be able to use some of the technology to get that done. And we have some folks doing some wonderful things on that front. So don't hesitate. Be sure to visit the site. Email us your questions. You're welcome to call. The markets are here today, are a little bit mixed, right? We've had some nice swings. Swing machine is struggling a little bit. No definitive trend yet. We're just kind of in a, pretty tight little. Well, I don't want to say tight. The expected move I can share with you. We shared with our members last night. We go to the expected move on the SPY, and the expected move for today was 1.23, and the SPY is expected to move $6.56 from high to low, low to high today. Should be about a 1.23% move. And let's go see, just let me punch up. I won't do it on this screen. Oops, that's okay. Let me open up a another chart. I just want to get an idea of the range today, just how many points that's been. Day's not over. This comes from the options market. Let's put in the SPY, SPY. Let's put this on a daily view. And let's see, today's high was 535. It's kind of crazy, right? And today's low is 530.95. So let me do a quick math. It's probably about $5 or $6. Bear with me. I'm a little old-fashioned here. I still use a calculator. 535.73, 535.73 minus the low is 530.95, 530.95. The market has moved $4.78. So not quite, but the day's not over. By the way, for you daily candle watchers, when I look at that candle, it appears to be a doji. What we call a little bit of a high close doji, and it's doing it right at the Fibonacci retracement of just under 50. It's not really a Fibonacci number. It's about 50% retracement of that other move down, but it is that bounce zone. So now that a doji, she would close where she opened, and it is indicative of indecision. We're not sure. Now, it could be individuals, it could be, machines, and they're just not sure. But it is a two candle pattern. The doji in and of itself doesn't mean, hey, go sell it. No, it means, okay, the market is undecided here. And over the next 3 days, not the next 5 days, next 3 days, particularly tomorrow, if we finish with this doji, which way are we going? It's got to happen within the next 3. And what we want to see is, we don't want to see today's high get taken out. We want to see today's low, which would be right now, it's 530. We'd want to see that get taken out. We see that get taken out, then we got a confirmed reversal off the doji, and we probably got lower prices to come rather rapidly. We're still thinking that we need to go down and test out those lows of around 5,100 on the S&P, or on the SPY about 510, thereabouts. 511. We think ultimately 500 is going to get taken out. We'll show you why I don't know, it's not a question of being bearish or bullish, but it is a question of direction. And we do think that more money is going to be made here on the downside than on the upside. Now, intraday, when we're trading intraday, I'm sorry, I messed up my, there we go. When we're trading intraday, not much else matters. Intraday is intraday. So we can also see, we can force this, or force rank this, and some of the stocks, let's see, like Tesla, you could do the same thing. Tesla was expected to move today about 6 points up, between, it would be the range. So this is a beautiful tool to help us focus on what we need to focus on. This is, like Clack. We would have known this last night. Clack is expected moving, at 22 points. It looks like it's up 10, but I don't know what the low was as we come and take a peek at this. And I'm happy to answer any questions that you have, but I want to show you some of the tools that we were showing our members last night on video, and then they got to act on them first thing this morning. So let's go for those, especially those folks that like to trade stocks and options. I want to show you, where is it? It's over here. Here it is. This is the options club selector. And again, the Zoom writing keeps leaving me. This is the SMC options defined risk club selector radar. And so we can force rank this. So last night, which the markets wouldn't have been open, but you could have known, it was telling us that we had out of the entire S&P 500, suggesting only 2 calls. One being Monster. I'm a little suspect of that company. I'm not sure. I think they're owned by another company and it kind of trades with their stocks. So I don't think it's a great trading stock. But the other one was McKesson. And I looked at that first thing, not very, very first thing at the open, but you can certainly look at your where that thing opened, because you would have known from our tool to be buying a call. Now, I probably would have bought it for, at least 10 days, ideally, 35 to 45, exactly where you bought it. You could have also, would have been a bullish, a setup. It was a bullish setup. You could have sold some put credit spreads, could have bought shares and sold a covered call, a number of things you could have done, but you are up 12 bucks. So that's nice. That'd be a nice trade. What about on the dark side, Don? Well, last night, now you see these little phantom vignettes. That means that they were there last night and they have moved out of there. But last night, not all of them have worked, but last night we were told, we'll go through each one. AIZ to buy a put debit spread, right? So it's not profitable yet, but it's still in play. This one, buy a put debit spread, if you did that at the open, I mean, you got 10 points in it. Buy a put debit spread, look at that one, 18 points. This one here, buy a put, that one's not working out so good for right now, but this again, with options, we're trying to hit the side of the barn. I still think that would be viable. And then this one here is down. These are bearish bets, right? So this, at least that we want them directionally, we want them down. This one's in the money. This one down a little bit, at least off the high. And as well, some of these down. So wouldn't have been hurt too bad. And then of course you got iron conduit candidates, and that's where we get them from. All right. Let's go back and look at, okay, so the radar isn't giving us a whole lot, and I'm not going to talk your ear off by any means today. I'm not. I'm happy to answer any questions. We did send out, this isn't really, I don't want to get caught up in the politics of the thing, but as it relates to markets, I do think people need to be aware of something. And so I'm going to repeat it in a couple of places, but or a few times, and it's going to be on a YouTube video. But the United States has an election coming up, two very distinct choices on the ticket. Personalities aside, social issues aside, let's talk about markets. There is a party that we know, because they're trying to do it at the state level, Massachusetts and in California, that are very fond over taxing unrealized gains. So what's the difference between a realized gain and an unrealized gain? A realized gain is when you buy a stock at one level and sell it higher, and you actually realize the profit. Unrealized gains is you bought the stock, you haven't sold it yet, but you have paper profits. Well, the other side, and I think you know who they are, They want to tax that. They want a piece of the action before you even sell it, before you even realize it. Now, once again, you're gonna have to hire more accountants because they know you're gonna have all kinds of questions, about, well, what happens if it goes down after you pay the tax? I don't know. I don't know. I don't know how that's gonna work. And there'll be a whole lot of things. There might be some people saying, well, you know what? I got an IRA account. I got a 401k. I got Roth IRA. That's all tax deferred and it's going to be meaningless to me. Well, before you think, or dispense with it at that fashion, just know one thing. I've been around doing this a long time. They rewrite the rules. Okay, we don't have the same markets we had 5 years ago, 10 years ago, 20 years ago. They will rewrite the rules. And if they want to go after your unrealized gains in your retirement accounts, they will. They will figure out a way to get it. But even if they don't, let's say even if they don't, if they tax unrealized gains in these markets or this market begins to think they are, you are going to have, in the words of Ross Perot, one giant sucking sound. You are going to have so many people rushing for the exits, trying to book those profits before they come in. Now, was that the sell-off of the last couple of weeks? I don't know. Maybe it was the carry in trade. Maybe it was something else international. I don't know. But somebody was getting out of the way. So I'm not telling anybody to scare anybody or anything else. And I don't know what's real, isn't real with the polls. And I don't really care. I don't really know. But just read what they say, read what they do, and her first decision was to pick somebody who owns, he's not a stakeholder. He doesn't own any stock. He's never owned any stock. He's never even owned a home. Okay, that's who I want. I want to put somebody, at the head of a company who has no experience running the company. I want to put somebody in a position over, he has none. He's not a stakeholder. Well, that's rather chilling, but that's what, but those are the choices. Now, somebody may say, you know what, I don't really care. I'll pay the tax or whatever, but that's fine. But now if you have children, you have grandchildren, and they're coming out of these schools with these gold-plated degrees in gender studies with a $200,000 debt. Good luck getting a job, because if these markets go down, what do you think the first thing management is going to do? They're going to cut. They're going to cut. So there are certainly huge ramifications. But California, and I have family in Massachusetts, and so I see the news feed coming through Massachusetts. Now, I left Massachusetts when I was a kid. When I met Susan, I was 17 years old. I'm kind of dating myself, but I was 17. We met first semester. We weren't serious, early on in the first few weeks, but Susan knew in that first semester that I was going to get my education and I was leaving the state. She knew that. And then when we got, more serious during the thing, I was leaving. Don, and I made it clear to Susie, we're going to be together. We're leaving. We are not staying in what I called at that time, Taxachusetts. I am not going to support socialism. I said that way, way back when. Way back. I can't believe that people are there and pay for that crap. It's unbelievable what they pay in taxes up there, and for the quality. It's just, but they're talking about a state wealth tax now, unrealized profits. So it's definitely there. And now, am I going to place a bet on that, or am I going to no. Am I going to make myself sick over that? No. Why not? I'm a trader. I'm a trader. This filters all the way back. This is yet another reason when I sat down with Susan 2002, 2003 and said, hey, Susie, we've got to take control over this, kid, because they're going to change the rules and they're going to change them again, kid, and God knows what it's going to be. And you say, oh, that can't happen. Oh, no, I don't think so. Oh, yes, it can. And money will flow so fast. But any case, so yet another reason why we trade, and we will have a front row seat. When Trump got elected the first time, I had a particular program running. It was a fabulous night. And it was a point and figure program. When it was announced initially that Trump had won, the markets crashed. I mean, down hundreds of points. And in the left came out and said, see, there you go. You did it. You screwed yourselves. And then within minutes, I'm talking minutes, it crashed, and within minutes, it roared right back to where it was and then took off. And actually there was a Trump low there. It never went back to it in the whole time, other than, the COVID low, which was really after him. It was a tremendous trading night. And then finally, I just had to shut off the machines and go enjoy myself and watch the spectacle. That was 2016. They won't waste any time, and it could be happening in advance. If the markets begin to, sniff this out and it, and they know, they'll move in advance. I mean, why wouldn't you? I'd want to realize. Now they can always, now the other thing is they can always backdate it too. If they come into power, they can say, hey, we're going to backdate it. So, but I just mention it because it is market related. It is, and it is one of the reasons why we trade. The first website that we first had, you may see images of it. I had all the politicos on the front page at that time. And it was Chris Dodd and Barney Frank and all of them. There were some Republicans in there too. And the comment was, do you trust them? Do you trust them? Do you trust, Wall Street? Do you trust Madison Avenue? That's what I'd say. Do you trust Wall Street? Do you trust Madison Avenue? Do you trust Washington, D.C. with your future, your kids' future? Then fine. Buy the S&P, throw it into a 401, you take a nap, and, good luck. You have a great life, and I hope it works out for you. And it might. It might. It absolutely might. But it may not. It may not. It's shocking. The gentleman in the YouTube video that I just copied and sent out was Vivek. And the kid's brilliant. And but if you think he's all wet, he did say more than a year ago that they would pull Biden before the convention. They would pull him, and they were not going to primary him because the machine did not want the people who are screaming and yelling about democracy. They didn't want them choosing anybody. God forbid they could choose, they don't choose the right, machine candidate, which is, another story. But he did call that. So he actually, in that message, if you hear it, he articulates it much better than me, and he is spot on. And they will do it. They will do it. They're going to have to pay for this everything that they've done now. And that's always been the concern. When this thing blows apart, and it will blow apart at some point. I'm not saying it's going to be 6 months or next year. It will blow apart. It might be fitting that it blows apart on their watch, but when it does blow apart, they would be the ones to remake it and rewrite the rules. And that could be absolutely shocking. And we live and breathe and know this. How many people in a stadium of 100,000 people have any idea, of any of this? They have none. Little to none. Because they just don't want to be bothered. When Ben Bernanke was interviewed in 2008 or 2009, when he was launching quantitative easing, and he was asked by, I think that guy Pelly, Scott Pelly, another fraud, and was asked about, well, some people say that you might cause inflation, and what do you say to that? Well, that's ridiculous because a dollar's a dollar. And unless you're spending dollars here, unless you're going to Paris and sitting out in a cafe ordering French wine, it isn't going to make any difference to you. Oh, is that right? Okay. Well, when I go and I buy chlorine tabs, anybody got to buy chlorine tabs recently for their pool? Jesus Christ. I'm ready to cement the thing over. I used to pay I used to pay for for a 75-pound tub, I used to pay $50. Now it's come down. It's only, I think, a 50-pound tub. I can get it for $2.75 a tub. I used to pay for 4 buckets of chlorine, never paid much attention. 4 buckets of the 5-gallon jugs. I used to spend like 15, $16 every single time. Every single time I go there, every month, the SOB increases the price. I'm like, are you kidding? I mean, it goes up every single month, every single time I go there. We're now up to $35. So it gets passed along. And they got to pay for all this. So, they want, free Medicare and Medicaid and free education for everybody that just came into the wagon too, that just came across the border, that they don't work, they don't own stock, they don't start a business, they're just here for the ride. And we got to make room for them. We got to pay for all that. Okay. Somebody's going to pay for it. China is going to pay for it. Russians are going to pay for it. So, you have, as a trader, you have a front row seat. So let's go take a look at what they're doing. Let's go see what we can discern together here a little bit where money is flowing today. Now, we don't make any grand calls, right? That conversation is more of a parlor game, more of a broad context. Not telling you that, it isn't. I used to say this, Susie, Don, I'm getting concerned. Like, don't get concerned. We want to be aware, right? I want to be aware. I don't smoke weed. I don't drink alcohol. I don't take any antidepressants. I want to be dialed into the world. I've always wanted that. I want, when I feel good, I want to feel good. And if I feel bad sometimes because of something, then maybe I'm supposed to feel bad, so that I can react or do what I got to do. I just not sure that everyone is supposed to go through life without, being, I see sometimes my, old friends and, in Massachusetts, they numb to it, they just turn so numb. Maybe if everybody was a little more dialed in, maybe we would, we'd be all in a better place. But that isn't the case. Maybe that guy she just picked as the VP, maybe he is representative of a greater proportion of the country than I would care to think. He didn't bother to try to start a business. He didn't bother to try to employ anybody. He didn't try to, he was just, carving out his little nest, I don't know how he can do it too with a DUI in his background, but I got to say, in 1995, I was working for a Fortune 100 company, and I got news for you. If I not only if I had a DUI, I mean I would have been fired on the spot, and I also would have been totally out of the industry, But yet, and that would have stuck. I realize people make mistakes and everything, but is this the best? But we're not, but we don't make, that's why we don't hold on for dear life, or you only live once, or, or day trader. Oh, the markets always go up. Okay. We're not going to go that route, but let's go take a peek. Oops, I just hit the wrong button there. Let me try this again. Yeah, there it is. All right. So let me see if I can click on this. Let's see here. Want to look at the fear gauge. And the fear gauge, we've come in on the VIX, but we're still risk off. Still risk off. So we still making an interpretation that any kind of rally should be sold until this, especially this 9-day VIX can go risk on, and it hasn't. We take a look at skew, and skew is still trending up. So the market, as the price goes up, the market is getting more defensive. By the way, what type of wedge is that? This is a bearish wedge. And we made a new high, but it is getting pretty tight. We look at the yield curve. That's what I want to look at. See, this is not bullish. Okay, but people are interpreting it as such. This is the 30-year, this is 30-year treasury. See that? 30-year treasury. It's down 20 basis points. It's not 42%. So the 30-year treasury is 4.2. The 10-year is down 25 basis points, 3.9. Just move the decimal over. That's the yield, 3.9. The 5 years, 3.7. And the short term, the 90-day, this is the one controlled by the Fed, is stuck at 5, basically 5. He is going to cut. He is going to cut. But these are going down. And you may say, and I read, and your neighbors may say, well, that's bullish, Don, because when the 30-year treasury goes down, the mortgage rates go down. And that's true. Mortgage rates now, they're probably down a little bit more. When they're down, I want to say like 15, 16-month lows, right? So they've pulled in. And we are seeing a little more activity, a little more movement of people, selling homes and maybe buying some homes, a little more activity. But the impression might be, well, that's going to be really good. It's going to be really good. And we're going to get more, we're going to unlock some selling in the home market. I think so. I think it will. But I don't think it's going to mean that we're going to get higher prices. I don't think the interest rates going down is my interpretation of this. I don't think the interest rates going down are bullish. I think the interest rates are going down because there's big money here today showing its hands again, that it is running to hide, getting defensive. Maybe they think she's going to win. They're like, shit, let's realize these gains now and get the hell out of Dodge. I don't know. Maybe it's the end too, right? So, in fact, we'll take a look at the yen in a minute, but that's not so good if you're bullish the economy and bullish the market. And, I think if you're going to be bullish the market, I think you've got to be of a mindset that companies' revenues are going up and their profits are going up and their prospects for such are going up. If their revenues are coming down, particularly revenues, and then their earnings, and then their prospects are not so great, then why the hell you own them? Take a look at Intel, down 35, 40% in like 2 weeks. Can they do that to the S&P? You bet your ass they can. You bet your ass. Yeah, absolutely could take it down. And it'll have some reason. It may be some international something, Certainly don't want, the likes of her, which is, again, I mean, she's coming from, she's already in power. She's had a chance to be here for 4 years. I mean, she could have said all of the things that she's saying now. She hasn't said much, but where was she for the last 4 years? It's not like she's coming out of a primary and saying it for the first time. So when she says, hey, I'm going to cure inflation. Oh, you are? Okay, well, why the hell didn't you do it in the last 4 years? How come we never even heard anything? I didn't think we had any inflation. I thought everything was rosy. What huh? What am I missing? Oh, we're going to take care of the border. Whoa, okay. Well, why didn't you when you were there? I mean, you had been there. You're not coming out of a primary. Why didn't you do that? I don't know. I mean, I just, I'm a little bit of a critical thinker. I think you guys are too. But, in a stadium of 100,000 people, ask 100,000 people, as they go in, what's the value of a dollar? And you're going to get a look. I mean, you're talking, folks that, I don't know, paint their face, green or cheese, wear cheese heads or something, and looking forward to that. I mean, have fun, have a good time, but they're just not in the game. They're not paying attention. And that's how we get into the shit we get into. Financial crime, but they'll attach some other sophomoric explanation. It's going to be quite simple, but it's getting it. This is not good. This decline in these interest rates, and I think they could go a lot lower. I think we could revisit. I think I've told Susan, I'm going to say it now. I think we're at the 10-year yield is 3.9. We just got to go down 900 basis points. We could be down to 3%. We could be on the 30-year down here at a 3 handle easily. Easily. We could be right back at it. Does that mean your home's going to go up another 100 grand? No, not so fast. Not necessarily. Not if folks are unemployed and on top of it, then they're in debt. They gotta pay the hangover. So that I don't think that's too good. Let's what else we want to look at? Let's take a look at the ETF world. Okay. Here's the VIX, north of, and here's the diamonds. They're below their mean, trending down. Russell is a risk appetite. They're not buying the small caps. Nope. No, they're not. We're just hanging out up here. Look at the sectors here. This is biotech's not so good. Transport's not so good. Regional banks not doing so good. Regional KRE is a regional banks. They can't make any money when the short-term rates are up and the long-term rates are going down. So you got to get out of the finance. I'm not telling you what to do with your money here, but that's what they're saying. That's why the Fed is going to have to cut interest rates to save the regional banks, but not to save you or to save the markets, but to save them, or they're going to go out of business. They're going to have a out of business sign. Again, largest manufacturer of furniture in the country, CONN, out of business. I think Big Lots, big store. Nobody even cares. They're out of. I think they're out of business. What's going on here? Here's the building materials, not doing so good. I mean, we're underneath its mean, headed down. Energy, oh, that's good. Energy's doing good, doing all right, hanging in there. So your energy's not going down. Here's the financials. These are the big money center banks, not doing so great. Industrial's not doing so good. We're on the wrong side. They should be over on this side. They can stay over here. Now, technology, not doing so great. Staples, XLP, Staples. Well, they're doing really good. Oh, you know why? That's like Kroger, Publix, although they're a privately held company. Why do Staples go up during bad times or recessions? Because by charter, some of these mutual funds have to be invested. So they say, well, shit, we got to get the hell out of the banks. The banks aren't going to make any money. So let's just put it into something like groceries and stuff because, we just want to get the return of our money, not a return on our money. So let's go park it into Staples. Let's go park it into utility companies, and let's go park it into healthcare. These are 3 defensive sectors, and look at the 3 that are north of their mean. That speaks volumes to me. Now, I'm not going to trade it in and of itself that way. I don't, because we use other tools, much more precise. But if you're trying to get an interpretation of where we are, and then look at consumer discretionary. XLY trading at 173, and you can put it on a chart. Do you know in 2008 where XLY was trading? $19. It's at 173. It was trading at 19. Consumers been doing great because we've just been, money's been coming out of sprinkler heads. I mean, we literally told everybody to stay home and we sent them checks. Do you know the guy, the VP from Minnesota? And what in the world is going on in Minnesota? Anybody from Minnesota? What in the hell is going on in that state? I mean, what in the world? I guess they got a bunch of Somalis in there, but what is going on? But they had one of the biggest COVID frauds going on for hundreds and hundreds of millions of dollars. He didn't own stock, but he's probably got a couple of Swiss bank accounts. They always do. The Marxists, they always do. They're not going to participate in this, but they'll participate in the graft and the corruption and then hide it in some bank account. XME, but consumer discretionary, not doing so great. But boy, that'd be a hell of a thing. Imagine from 19 to 173 if it just came back, to 80. Holy smokes. Do you remember? Does everyone remember what the strip malls looked like in 2008? I remember car dealerships going bust because they were all on borrowed money. Domino's pizzas were closing. I mean, they were all emptied. That can't happen again, can it? Yeah, it could. Big time. In fact, I think it probably make it worse. I think it make it look like a walk in the park because these kids, the younger people today, they don't want to work. You know it, I know it. They don't want to work. They don't want to do it. I mean, Men's Warehouse went out of business and never came back because they don't even wear suits. They don't do it. They don't want to participate in this. So how the hell are we going to build out of here? I guess these two, they're gonna stop inflation on a dime. Sure they are. They're gonna price fix. Oh, that's a real successful approach. You know how the markets will react to that? Um, Not too good. Not too good. It's very, and then we look at, so then you see as interest rates go down, what the bonds do, they go up, right? They go up. Look at the TLT. Put the TLT on your charts. See, what is the TLT doing? It's going up. It's going up because they're hiding the money. They're parking their money into bonds. They're like, you know what? We'll be happy to take 3%. And maybe in this recession, maybe we're going to get into a deflationary thing and there's no economy to speak of. And they just got to good, try to do the guaranteed basic income and try to get something going, get it going again. Money's got to be circulating. It's got to have some velocity. But if they're not even interested in earning it, copper, but look at gold. Look at what gold is trading in GL. Now this isn't gold. It's paper gold, GLD, trading at 227. The mean is 224. Now gold can do well in inflationary times, but sometimes it can do better in deflationary times, and it can do well in times of uncertainty. When people are like, you know what, I wonder if these crazy bastards are going to take everything apart, and create a wealth tax. Maybe I just got to go get some gold bars and bury it in the backyard. No, I don't think what we saw. Now we saw a VIX spike, but let's go take a look at the Pebble Beach. And all right, so this is a monster. Let's see here. This was on the 12th. That's today. And we got an entry. Oh, Jesus. I'm looking up here. It gapped down. It gapped down. So you wouldn't have been able, well, it gapped down from the other day, actually. So let's see. Where is that entry? That seems a little high to me. The entry was 50. Did that thing trade 50? No. No, I think that's being impacted by the gap. But these others are all today. Let's go look at pool. Let's see if we may have some gaps, but pool, we got a sell signal at pool at 349. Could you have gotten 349? That's when it would have triggered. Let's go here and look. 349. Yep, 349.64. And our signal came in at 349.10. And so this represents a $10,000. It's 1.3%. You could have done it with an option. That's, but you're profitable. This is Newmont Mining. We got a buy signal at 48.10. What's the low today? 47.98. So at 48.10, it would have gone off, and that looks pretty good. And you could have made 1.74% today. How about FedEx? FedEx generated a buy at 277.97. Let's take a look at FedEx. That looks kind of interesting. It looks for a bounce, right? We got a gap up, a little bounce here. Could you have gotten the price? So I'm looking right here, 277.97. The stop is 274. It's up 115 on 10,000. That's 1.15%. So could we have gotten that price? This would have triggered. You could have had that set to your iWatch or your phone. It could send an alert to your phone. Let's go look if you could have got 277. So what's the low for today? 277.49. Yep, it would have triggered it to 277.97. So you could have had that one. Again, we couldn't have had that one because of the gap. So we're kind of validating. This one just moved around on us, but you get the idea. I mean, out of all of them, I mean, they're all profitable. This is a wonderful little tool to do some precise trading of stock, or let's look at CLAC. By the way, CLAC is just triggering now. Take a look at it. Yeah, not crazy about the look, but potentially get the idea. What else are these guys doing? And there we have it. Again, I'm not gonna I want to give you a chance to ask any questions, but I think if anyone thinks that that VIX spike of a week or so ago, that that's over. Now, I don't know if it's going to be the next few days, next few weeks, or next few months, but that was a shoe dropping, and I think you're gonna hear another one drop, and we will see it. We'll be the first ones to see it, and we will act on it. Right now, typical Monday following last week, I think we got, kind of a doji day. I wouldn't be the least bit surprised we finish a little bit on the green side, and tomorrow we might see the ideal situation would be see a little bit of a bounce, then we get a turnaround Tuesday, and then maybe we slam down and take out today's low, and then I think you see a nice little pivot, and see if we can get another volatility spike. The VIX right now, let's just go to that, back to that fear gauge too. When we come here, and this is our interpretation of this fear gauge, let's go here. When we look at this, this 30-day VIX is at 1995, right? Still risk off. 18 to 22 is normal. That's where it lives. It's normal. This is normal. We're in the normal range. We were down around 12 or 13. That was abnormal. Okay. The market was stoned, a bunch of stoners. They were stoned. But we start getting above 22. We go back up. We had a spike up to 65 somewhat just a week or two ago. And now we're right back down to the normal range. When they get a market fire like that on the VIX, they'll come in with the machinery and the feds and everything, and they'll try to hose it down. They don't want the public to get too animated, especially in front of election. But can they control it? Not entirely. Not entirely. So I'm going to shut up. I'll let you watch the radar, but just not a whole lot going on right here, right now. And sometimes it helps just to sit on your hands. Monday mornings, most of the time, that's exactly what I'm doing. We got plenty of time to make money this week. Any questions, let us know. Remember, inflation is a tax. It's a hidden tax, and it impacts the folks who don't have assets, and it adversely impacts the folks that can least afford it. And when the government steps in and says, I'm here to help you, I'm going to price fix, I'm going to provide guaranteed basic income, and I'm going to do that. And the people say, yay, that's all good. But it's like pouring gas on the fire. It makes it worse. We get into a realm of shortages, and then it can really, it's an insidious thing, and you can even get into a deflationary cycle too. So it's very, we're in a very much of a market inflection point, political inflection point. We're very much at an inflection point. I don't want to say that like this is the most important election, because they always say that and everyone, but we are at an inflection point. And you want to be thinking about, I started out by saying, and maybe said in the video, there's a part of me that says, you know what, maybe they're the ones who created it, really poured the gas on the fire. I mean, Biden wanted to do even more stimulus, so he would have really even done it up. There's a part of me that says it should break on their watch. It's just that they'd be the ones to remake it, and God knows what that would even look like. I don't know. I don't know. And the other guy, Trump, it's gonna, it's gonna break on whoever's there. It's gonna break, I think, in the first 6 months of their watch, and I don't even think he's gonna be able to. He's not gonna be able to prevent what's coming, in my view. Not prevent it. It's just a question of who's gonna get the turd. Where's the turd gonna go? Who are they gonna blame? You know who they're gonna blame or try to blame. And then how to get out of it. And it's been years in the making, years. And I always question why Bernanke didn't serve, and no one ever asked the question to him. Why did you only serve one term as Fed chairman? Did he start something that he knew he couldn't, or disagreed that it shouldn't continue? And they just told him, look, just go retire, go take a nap, and we're not stopping this. We're gonna keep on keeping on, and we're gonna have a hell of a time for 14 to 15, 20 years. And it has been. It's been, craziness. Look back on it, it'll be like, my word. But any questions on the trading, let us know. 4 minutes if you want to trade the 1 minute. 4 minutes. 6 minutes. 4 minutes. 4 minutes. Oil, 146 minutes. 189 minutes. This is 189 5 minutes. So this was over on this is last night at 9:20. Here's gold. What is Bitcoin doing? Not so good. On a 5 minute. On a 5 minute. We do have a program running, and if it triggers an order, you'll see it. You'll see it up there. The machine is running it. There's a lot of decisions. We can't control the market, and all the things that we decide, we really can't control it. We can influence it. We can collectively, exercise a common sense. If the country's lost its common sense, then the country has lost its common sense, and we're gonna, it's gonna play out the way it plays out. I will exercise my common sense. Presumably you guys will too. Because I do think it's come down to common sense. I think that is in short supply. We got Ivy League educated fools. Um, truly. But we can't control outcomes. We can influence them. We can't control the market. Can't force it up. I can't force it down. That's okay. I accept that. Accept the uncertainty. I'm okay with that. Always have been. We've been doing this a long time. So I don't get angry about it. So don't let me get you angry. I'm not disappointed, but not angry. I used to get really angry about the Federal Reserve in the in the 2000s, even before, because I understood what the bastards were doing. And we didn't even have social media back then, really. There was no way to get it out. You know, I used to write letters to my family about it. I got some of the letters penned to my board. I was trying to, like, in my own way, to tell my family what was up. Um, but you can only control what you do. What do you trade? What leverage do you use? What tools do you use? How much time do you use? What strategies do you employ? Do you understand the relationships? And there are relationships. So it's very, very comforting to us as traders when we see an opportunity and we see at 12:45, the VIX, for instance, go long. Well, that's kind of interesting, right? We've already shared that with you. 12:45, the VIX went long. The 1 minute at 12:56 went short. There's $700. The 1 minute went short at 12:54, less than 9 minutes later. There's $1,300. Maybe that's your trigger and that's your trade. You just made 2 grand. Take the rest of the day off and wait for that again. It's right there. 12:56, 210, 12:56. So why did that VIX go up at 12:45? I have no idea. But that's reflecting of in the options market. They're big, big machines with big, big leverage, big funnels. And that's what we're picking up on. And that's what we trade. We trade. If you want to slow it down, you can slow it down. You don't have to be here intraday. You could do it swing trading, but when you slow it down to a daily view or a half a day or longer, just don't use as much leverage. Reduce your leverage. Maybe don't play any leverage, so that you can be more patient, right? You don't want to put on a daily swing trade one way or the other, then come in and, chew up your fingernails, fretting with what's going on, in the 135, right? So but that has to be worked out and shown to you, during Q. It's 1:05, guys. We're only going to do these for an hour. We got to get back to work. So I'm going to hang out here for about 5 minutes, give everybody a chance to watch. And if you got any questions, let me know. It's our opportunity. Another catalyst could be, I'm not so sure that she's going to be the one, actually. I don't think the VP guy is going to make it. I think he's going to get taken out at some point. I don't think so. I think he's gone. And because he's worse than Biden, as far as the draw and the down ticket, he's going to hurt them. So I think they're going to jettison him, or he's going to take himself out. But I'm not so sure that Harris is going to pass on the first vote. in that convention. And that convention, by the way, is going to be in Chicago. Now, if you're from Chicago, you know what that city can be like. It's, like Portland. It's a short drive from Portland to Chicago. So that's going to be, is that going to be 1968 up there? They'll probably have that place locked down. But if she doesn't pass, if she does not pass on that first vote, she doesn't get the nomination on that first vote, the shit is going to hit the fan. And I will be sitting here watching the markets, and I will have the tools on. It'll be a beautiful thing. And they know what they're going to do. She may not know, but they know. And they'll have a replacement. She may wind up back in the VP slot, and they may have another front runner. Could be any number of things. So I don't think this thing is over at all. I don't know how in the world 75 to 80 million people can be happy that they never got a chance to express their point of view or their vote for a candidate. That's rather shocking to me. They're okay with it. They're okay with some machinery choosing it now. They've done it the last couple, I mean, maybe they've done it the last 30 years and they just don't seem to care. And that's rather shocking.
10,000 years, bright shining as the sun. We've no less days to sing God's praise than when we first began.
Okay, folks on YouTube, we just want to say thanks for coming by. And I can only describe to you, when you get your trading to a place where you can embrace the uncertainty, I personally, I don't fear the uncertainty, and I don't fear the future. We're alive, take control, and the chips will fall where they may. Maybe not a popular message. Probably not. Probably couldn't get elected dog catcher. But we're only trying to reach folks that want to take control over their own destiny. And we know that's a minority view. And to that end, any questions, let us know. We wish you the best. And we'll be going to be here trading these markets all week and paying particular attention to the closes, especially the weekly close. I think the most vulnerable market right here, right now, is the S&P. I think it's at a critical spot. I don't think it'll be here Friday, and I think she'll be down. I think we could be, just looks that way. But I'm not trading yet that necessarily. We have options out, been perfectly frank, out to, we've got a little bit end of August that we got to deal with near term, probably today or tomorrow. And then we have others out into the end of September, into October. So we got time on those. Intraday, we do our intraday thing. We go, in fact, we'll be more eager to go long and hedge some of that than maybe normally. We wish you the best. And I'll just take a peek if we got any questions at all. Doesn't look like it. Thanks again for stopping by, and be sure to visit the site and be in touch. Have fun.